Hello, everyone, and welcome to the Tuesday, February 20th edition of this weekly market check-in with myself, Greta Wall, and David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Hi, David. Thanks for doing this again today.
Thanks for having me.
All right, just a quick reminder for everyone who's with us. If you have any questions, submit those in the comments or on Twitter or on YouTube. We'll get to them, but submit them now if you want them answered so that we know how many we have. Let's get right into today's topic, though, and that is shorting hot stocks. This is something David has had a lot of success with lately, so we're going to talk about SMCI in particular. So Friday was a great day for Inner Circle with SMCI. So David went home on Thursday night with the Lotto 900 puts for SMCI, the Friday expiration puts. So he went home Thursday night with those puts, added to them in the morning, and then they exploded the next day as the stock was
Out of fairness, there was also short some stock overnight, which was a bit painful in the morning, and some 750s.
Yeah. So David, he went home short stock, long those puts, but the puts were the major focus for the room. Inner Circle members following David on those puts. You can see here in the chat the success that many had. Some in at 75 cents, out at $10. David, where, just kind of an estimated range, where did you get into those puts and where did you get out?
I totally don't remember, but I mean, I'm being, because I was really
no, it's fine.
Trading the stock, but most of the puts I was out early because I was focused on the stock. So maybe I made 200-300%. The chat itself was focused on the 900s for the day. And they bought them in a range between $2.50 and $3.20. I can't say that we sold them at the high, which was 150, but I can tell you I talked to many people that sold them between 70, 80, and 90, and obviously had a generational trade that I probably won't come up with today.
Yeah, here's a look at some of those. One person from the chat saying they went from 22 to 180. Someone else bought the 950 puts at 265, sold at 77. So obviously a huge day for Inner Circle on those SMCI puts. And let's just talk about that a little bit more before we get into the relative strength index and all of that stuff. David, what is it that you were seeing in SMCI that made you go home short stock and along those puts on Thursday evening?
I was seeing basically the second most overbought condition I had ever seen in the history of my career. You know, I've seen KTEL, I've seen iOmega, I've seen Vivus, I've seen Qualcomm, I've seen GME, and I've seen AMC, and I've seen them all, right? At least in the past 30 years. And this one for a larger cap company, meaning it's easy to take $1 billion market cap and run it to 98 relative strength. In fact, in biotech, it's not uncommon. But this was something that's rare because this was now a $50 billion market cap. So I hadn't seen this, but maybe once or twice in the last decade, only with GameStop, which I believe at some point it was like the whole float was short. So I kind of understood it more. This felt like as great as the company is, and I was very much long it under 400. And as much as the revenue growth is exploding and they're connected to Nvidia, in fact, 30% of their business, it felt like a bubble. And the only thing I kept telling people is in these types of conditions, you can't assume you know the top. You can just assume that when they ring the bell, there's a 2 or 3 or 400 point swing, that it's really likely it'll be that type of swing. So don't assume you know the top. Wait for some identifiable signal that says you can actually size up. So I kept saying, listen, I'm a big boy and I'm scared to short 2,000-3,000 overnight. I'm staying itty bitty small with a few hundred shares and maybe doing like puts overnight. And that's what I did for size. And then tomorrow, if we get lucky enough to get an up open and I feel confident, that's where I would be doing more stock. And that's basically what we did. We got some signals that said, if there is ever a time for this to flush and flush hard, it's today. And that was obviously Friday.
Right. So you mentioned stocks like GameStop and SMCI was definitely looking like a meme stock heading into Friday's session. You tweeted this out on let me get my dates here. This was Thursday. You said SMCI now 97 RSI and up 150. So my math says 450 points more to go. Is that right? This is, of course, a kind of tongue-in-cheek comment there. But that RSI was really important for SMCI. So let's look at some of the charts. You can see the RSI topped out at 96.79 for SMCI before the stock tanked the next day, and that was really similar to the kind of ranges in RSI that we saw in meme stocks like AMC. The topped out at 95, just over 95 for AMC. GameStop topped out at right around 98 before falling. DWAC, Digital World Acquisition, topped out at 99, almost 100 RSI before tanking. So when you look at a stock like SMCI, which is a reputable company with real business, with a company like Nvidia, how do you reconcile it looking like these meme stocks that really didn't have anything, really no real driving force behind the surge, even though SMCI, I would say, definitely has more,
there's a lot of meat on the
reputable.
bone here, right? We have amazing revenue growth. We have amazing earnings growth. We have a tie-in in Nvidia that has been there for well over a decade. So there are a lot of reasons not to bet against the company. Thank God I didn't for many hundreds of points and was long. But for me, it became a bit easier when you're dealing with a market cap of 50 billion and you don't have a ton of stock locked up and you don't have a short the size of the entire float. There comes a point where institutions and people who have been in the stock recognize this is a bit Qualcomm-like, this is a bit Iomega-like, this is a bit Vivus-like, this is a bit any crazy press tech-like. I'm old, so I can give you a million names, but at some point you realize it's more fantasy than reality, and they're building in like a decade in advance, and the law of large numbers combined with a relative strength of 78 is likely going to have a correction. Now that correction could be quick and over, and it could make new highs again. But the likelihood of a market cap that size getting to 97, 98 relative strength and not taking a breath and correcting, in my opinion, was really, really obvious. So the key was to not get too big so you don't get blown out of the position, because what wasn't obvious is, to me, it could have been 1050 high, it could have been 1100. I kept telling people, prepare for more. The whole key here is you're going to need to be down 30 or 40 points to make 200 or 300 points. And if that is not your cup of tea, go to a different kitchen, because this kitchen is not going to be an easy one. But in my opinion, it's worth the payday for me. So I am full on. If I in the same day can be down 20 or 30 or 40 and something and think I can capture 200 or 300 in the same 24-hour period, that's my cup of tea. But it's not everyone's, and I respect that. So I thought the whole key to the trade was understanding that a non-meme stock, that a real company with a $50 billion market cap very rarely, almost never, would not have a correction at that state, and that it would actually be harder to figure out when GME was going to pull back. That's the way I looked at it. And then realizing that my template that I told Inner Circle and anyone who uses me for counsel was, okay, so I think we talked about this, Greta. If we didn't, sorry. Last week, I cautioned people about the market, but more so I said Nvidia. I said, this whole thing about Nvidia selling off after the numbers makes no sense to me, right? It's an institutionally held stock. It's not just retail that's been making the stock go up like this. So if you are any big fund, the Teppers and the Ackmans and the whoever, Chase Coleman, any of these guys, right? And you're up monstrous percent for the year, for the quarter, for the last 2 years. Do you wait to have a great number, see the stock trade down, and then sell it? No. Institutions sell into strength, right? And I said, expect there to be a pullback before the number, because they can't all be schmucks. Who waits for it to go down to sell? So I anticipate some downside, which also told me, well, if Nvidia is going to correct any day, can SMCI just ignore that and go to 100 relative strength when I've never seen it before? Probably not. Now, I'm not going to discount anything, right? Because it's already done things I was totally in shock by. But I had this broad spectrum of the market has some real downside to it the next 2-3 days. Nvidia itself is due a pullback before the print, right? Because I myself remember buying it in size at 500s like 6-7 weeks ago. We're now up almost 50%. It's time. And SMCI probably pulls back with everything else, given its relative strength is insanity. And then I want to say one last thing. The people buying it at 800, 900, 1,000, they're not sophisticated investors that are down 50 points and buy more. They get flushed out, right? Everyone who's been buying it the last couple hundred points, those are nervous hands. And the minute they sense that this game of musical chairs is over, they're selling, right? And then that selling begets more selling, and you get the snowball effect, and that's ultimately what you had. So it's really not as complicated as I make it sound, except for I tend to look at a broad spectrum of emotions, who was buying it, how quickly they'll sell it, the Nvidia earnings coming up, and the 98 relative strength. And for me, it was like, okay, it's going to happen. It's either today or Monday. But then once I saw it finally make a new low with Nvidia still up on the day, it told me, today is your day.
All right. Now, just a reminder for everyone that David is not a bear on SMCI. He played this stock on the long side right at the beginning of this rally. I think you got into it originally around like the 340 mark, right? And was long this stock for several sessions, really like a couple weeks in a row.
I thought I was a genius at 500, but did sell way too soon. But I really said, based on their pre-announcement, this is a company that is either a fraud, like definitively a fraud, or it's got to be up at the 400s immediately and has tons of room to the upside, because this is significant revenue and earnings growth. So I was quite bullish, and bullish AI is a theme and something I think lasts with us. But I like to tell people, a stock versus liking a company have zero to do with each other. Like, I love Shopify, but I'm making a lot of money shorted today or with puts. So I separate the two. Once it got to 900 or 1,000, I looked at it as an equity that was primed for a pullback, and less about the AI theme or a company, just something that was really getting so outrageous in how fast and vicious the move was that I saw a potential opportunity. I can't even tell you, I thought puts would go from 3 to 150, but I thought, like, wow, these could be up 3 or 4 or 500% in the same day. And then obviously it went even further.
Yeah. So let's talk a little bit about what you're doing with SMCI now. I was in the room a little bit earlier this morning. I did see you took like a small long in the stock. Are you still in that position?
I'm still in it right now. Okay. And what we did is we started off the day. I said, I really think pre-market, I told some people my first thought of the day was, if we get to 770, there's a cute trade there. Not like a all-in buy. This is not an exciting stock. I mean, we've come very far in front of Nvidia's earnings, but I thought, 770, I see a spot here. We're right at the 10-day, but beneath the 10-day and beneath the 21-day, there's like 40 miles of room. So I said, then it's going to be more artistry. And I said, if we get beneath there, I think any pullback will be bought and there'll be an aggressive bounce. So here's what happened. We bought some at actually it was like 768. It immediately went down to 728 or 730 this morning. I bought more at 750, more at 730. And by the time we got back to 765, I said, guys, this actually is a pretty solid winning trade. Don't get spoiled by Friday. Most of you probably own it. I did an average cost of 748, 749, and now you're up 17, 18 points pre-10 o'clock. Figure out what you can sell, because today I am not bullish the market. I don't like the action. We came in with SPX puts for that reason and things like shop puts. I think this doesn't have to be over. So figure out your P&L and what you're comfortable with. And sure enough, it flushed, made new lows, and obviously went beneath 700 at one point. And what I've been doing is, when it makes a new low, I've been adding back to the position. It just, like recently, I added some about 700, 699, rallied to 623, 624. I sold some of that, and now I remain long. My gut is it won't make it easy for us, meaning there's an obvious moving average, the 21-day, which this is unlikely to break, and it's 640. My gut is we probably don't get there, and this rally something like, I don't know, 30 or 40 from this spot before we ever would touch 640. I'll worry about whether I'm taking it through Nvidia tomorrow at the close, because frankly, it'll be like the number one sympathy play off Nvidia. So it was a fun trade early on, then got a little hairy. I wish I sold all of it. I wasn't smart enough to, but I like the risk reward here. So after shorting as high as 1,050, 60, do I think it's uber cheap? No. Do I think it's expensive? No. Do I think about an 18% haircut from top to bottom is enough where there's maybe acute bounce? Yes. So we're long. But overall, I'm kind of bearish this market. I mean, I wrote about it this weekend. I think I hopefully prepared Inner Circle for a rough week that might have some choppiness to the downside.
Yeah, we'll talk about your bearishness in a little bit. But you sent out this tweet after the SMCI trade. And this is, a long tweet, but it's the anatomy of how to short insanity, and your tips for someone who is looking to maybe go short on a stock like SMCI, the risks, the rewards, who it might be for, etc. I'll leave this up on the screen while you talk so people can read through it if they want, but just expand upon this a little bit more.
Sure. Okay. So here's maybe the biggest lesson I tried to help people with. I've been there, and that's, you wanted it to come in on Thursday. It was already extremely overbought, and there was a good shot at wood, right? And you did it. And you took some size intraday because you knew you wouldn't take it overnight. And it didn't work out. Didn't pull back on Thursday. So you take a loss. And then Friday you say, I can't deal with the stress. I'm not going to do it. And what I said is that's the worst thing you could do, because we can't dictate when it happens. We can just make sure we're sized appropriately for that moment. So what I said is your key is to stay in the game, not get too big and assume I will be right if you're following me, or you will be right if you're thinking it comes in, and just to stay connected and involved. So when you get a signal, and there were some very obvious signals Friday, you're not mentally exhausted and shot, or financially in a position where you can't throw more money at this idea because you just lost too much on Thursday. So the whole trade for me revolved around, we won't know the top, so there's a big signal, and right now we're kind of guessing we're close. But close on a meme stock could mean another 100 points higher. So it was all about figure out if you can be down in something and still make a lot of money. And I said, if that's not your cup of tea, just move on to the next trade. So that's what a lot of that meant. And I even write like 90% of the, especially anyone who's like got $100,000 account, should not be shorting SMCI. Maybe they could buy some small puts. But my thought was you have to recognize how you are emotionally and if you can trade it. Because I know some guys who are like, it's going to happen. It's going to happen. They shorted thousands of shares overnight, even though I was like, you're crazy. I wouldn't do it. And they lost too much and were too mentally exhausted Friday to take advantage. Thank God, only one or two people I heard about. Most people really had the day of their life Friday. But that's the key, is just to understand it is an emotionally driven stock, and we can't quantify emotions with a specific price. So whatever, like RSI you see, or how extreme it is from the 200-day, all that stuff you can throw out the window, because you just have to make sure if you're wrong by 50 or 100 points, you're not out of the game, so you can't come back on Friday. That's what that's about.
A question in the webinar here from Dan. He asked if you are a tier 1 here on SMCI.
I have no.
I'm not, you don't. I think use the tier.
Tier 1 position. Yeah. Is like the stuff. Yeah, I'm not sized up. So today, as a trade, 770, I bought some, and I always buy in halves or thirds on something like this, and then we got further down to 730, and I guess as tiers go, I was probably tier 2 or 3. But the minute, Dan, we came back to 760, I said, guys, I'm not comfortable with the market. I'm not comfortable with Nvidia. I'm comfortable with my SPX puts. That's what I'm comfortable with. So I am not forcing a home run. The fact that we're up 17, 18 points in this stock after capturing hundreds of points on Friday and making thousands of %, that's good enough for me, and I did sell a bunch. And that way, if it came back in, I could re-engage, which I've done. I don't anticipate I'm going to be sized of any significance unless shockingly we saw somewhere near the 21 day. Then I'm going to go out and really take a real stab at it, because I think in the next 24 hours it would bounce hard. But the 21 day, mind you, is down to 640.
All right, let's talk about Nvidia. Nvidia reports earnings tomorrow. This is obviously going to be
since Dan's asking, so I look for signals like this. So right now, I'm not really paying attention to the market. In fact, I tried to cancel Greta today. She basically said I couldn't, because days like today can cost me a fortune. So I said, hey, Inner Circle, while I'm on with Greta, understand you're looking for a divergence. We've had none today. We just see it worse in the market. We see Nvidia worse in the market. As we speak, the Nasdaq's at lows of the day down 250, and SMCI is up over 20. So you're getting that divergence. So some traders might be like, oh, the next pullback, that's my signal, stop it low. Because you are seeing the first divergence all day in SMCI, and that means it's divergence, meaning it's much stronger than the market. Just thought I'd mention that for people who are actively trading. I have enough to stress out while I'm on with you.
That's great. Okay, so Nvidia reports earnings tomorrow. You kind of tongue-in-cheek tweeted over the weekend, the stock market reports earnings Wednesday. Sorry, I mean Nvidia, but I mean really, this is kind of the stock of the market. Estimates are 20.6 billion, which would be 240% growth year over year. They had over 200% growth back in the third quarter, so that would be the second quarter in a row of growth like that. I know you don't necessarily like to play earnings with stock or holding calls or puts really into the print unless you have like really strong conviction.
Oh yeah. I'm about to say I do it all the time, but only if I have a gut feel.
But I know you do also like to go into something like an Nvidia earnings print with a plan. If X happens, then I do Y. If A happens, then I do B. So kind of how are you feeling about Nvidia's print tomorrow, and what is maybe your if and then this plan that you're
I told Inner Circle last week I thought the print was going to be harder than people think, because we might pull back significantly pre the print, which makes assuming there'll be downside action after the print very hard. So what I will do is, there is one thing that the bears are hanging on, and that's lead cycles have gone from like 11, 12 months on delivery to something like 3-4 months. The point is, it's probably just less of a bottleneck because they've never seen this influx of business in the history of the company. But some people are wondering, like, does the insane growth they have finally show like little not hiccups, but a slowdown, more a normalization? If that doesn't come true, and if earnings are blockbuster, and that means they're basically raising guidance by not $1 billion, but several billion. And if they quantify it by saying, we see growth like this throughout all of 2025, not just about this year, but you can count on growth like this through 2025, then it'll be more about where can we buy it on a pullback. If he talks down the market and says business is hitting on all cylinders, but take a deep breath, there is some normalization, things like that, then you got to really take a look at the chart, because we could see some real downside. On a stock like Nvidia, they're pricing in between 11 and 12%. Normally, I would think call sellers and buyers win. But if you get a comment like we're seeing normalization, lead cycles are shortening, stuff like that, then you really can get 11, 12% pullback like the market is actually pricing in. Or I will very often, when I think something's not priced in the aftermarket, meaning it should be down much more or much higher, I'll play after hours. I don't want to say, oh, I'm smart, because I'm not. But one thing I'm really good at is analyzing an earnings report on the fly, telling Inner Circle what I think is priced in or not. And I always tell them, and if I see no edge, I do nothing. But very often I do. So I'm not. I told my buddy, I was doing a podcast over the weekend. I said, listen, I'm not really worried about being in Nvidia or not. I am really concerned in a good way about what it says about the overall market. Does it start an extended correction? Today, we're already beneath the 21 day on the Qs because of what's happening with Nvidia. Does this finally take some bloom off the rose? And do we come in and actually see the 50 day on the Qs simply because it's time to press pause, right? And does it mean that SMCI can touch the 21-day? And does it mean that AMD, which gave great guidance, by the way, guys, that SMCI continues to go north even as the market is not. So I think you have your signal. And for Inner Circle, anyone that's listening, I'm a seller of trimming some if we get towards 730. Back to what I'm saying. What was I saying, Greta? So I can finish. Got too much going on here. But what was the thing I was just saying? I don't know what the hell I was saying. Anyway, I'm more. Oh, I know what I was saying. I'm more like what opportunity does Nvidia create? It may not be Nvidia itself. It may be buying the Qs because we finally come off 10%. It may be buying SMCI into the 21-day. It may be shorting AMD because it has no right to be here versus the other guys. Not because I dislike the company or Lisa, and not because they just upped AI chip guidance by 75%. But the rest of our company kind of sucks right now. They actually lowered guidance. So, SMCI 727. So, by the way, that's how I trade. And by the way, guys, I'm the first guy to say, like, I'm a bozo. I'm not always going to be right, but I'm good at seeing this sort of stuff. So if you want to know what I do, it's doing what I did with you on the fly, telling you the NASDAQ is at lows of the day. This is showing positive divergence, and that's how I try and take advantage of a stock intraday. But so, Greta, I'm really looking at, does Nvidia give the market reason to sell off? Not like today. Today is nothing. So we can get some meaty buys. And then does it mean, there's going to be rotation? Because maybe the market doesn't want, maybe it's not over for the bull market. Maybe it means it's time for small caps. Maybe it's time for my favorite guy, the biotech index, XBI, which is fairly down today. It was almost green at one point. So that's what I'm going to be looking at. What opportunity does it create? Because Nvidia is the market. That was long-winded, but I hope it was okay.
That was great. David, if you need to trade, like sell any SMCI or anything, you can do it.
Or whatever you want, and then I got to run, if that's cool with
you. But I mean, if you need to do it while we're on here, then go ahead and do it. But okay, so this is my last thing. I know you're not feeling great about the market, and you tweeted this over the weekend saying, I think we are nearing a correction. I have encountered several angry trolls the last week, and it typically signals something. Or when I look at the landscape, there's less and less I'm excited to buy. I'm just looking for a reset, 5 to 7% down, and I'm happy. As always, I'll have longs because it's a market of stocks, not a stock market. So what are you seeing in the market that makes you feel more bearish right now?
So it's funny. These trolls actually mean something to me, right? Like I do Twitter emotional checks when people are too bullish, but the trolls mean usually to me that people have made so much money that the people who missed it or on the wrong side or can't read my goddamn Twitter because it's right there. Like I'm trying to really be forthright with what I'm doing. That those people, when they come out, it's because everyone's made so much money and they missed it. And it's usually a sign, seriously, that it might be time to take a breather. And boy, there's some angry people on Twitter. All of a sudden, there's a lot of idiots. I mean, screaming at me about stuff when I'm like, I am in at 7 and it goes to 26 and they're still screaming at me. So that always means something. But then more importantly, it was just simply that when I looked at bio, when I looked at financials, when I looked at FANG, when I looked at software and cloud, when I looked at even cannabis had a move. When I looked at every different category that I'm interested in, and you could throw in EV and healthcare and semis have been, on a run we haven't seen in years. There just wasn't a lot I was excited to buy. So I thought, why is anyone else going to be excited? What will they see I don't? And I thought it really might be time for a rest, right? We also saw little things like, which I don't put too much weight in because I've seen it before, but we keep seeing the VIX creep up even as the market was making new highs, which a lot of people say is often a sign that maybe there's some downside to come. And we did see that over the past week. So for a multitude of reasons, I really started to feel like maybe I'll look like an idiot on Twitter, but I have no problem saying I see more downside than upside over the next week or two. And that's what's happening.
All right, great. All right. So for everyone who's still with us here, here's where, oh my gosh, sorry. You can visit t3live.com/DP if you'd like to apply for David's room, the Inner Circle virtual trading floor. That's where David is trading all day, every day, with like-minded traders like himself. This is a large group of traders. These are hedge fund managers and institutional traders, those with large accounts, etc. So it is an exclusive room, and you do have to meet some qualifications to join, just so that you're not in a room that's too much for you and you're taking on too much risk, etc. So David, thank you for doing this today. We'll be back.
Sorry if I acted crazy with it, but SMCI,
no,
people asked, and it did just rally 10 points, so that was kind of cool.
Yeah, you're great. All right, we'll see you next week, David, and everyone else. Thank you for joining us.
Thanks for joining, people. Bye.